The key challenge for the emerging markets of the Middle East and North Africa is to reduce their unemployment. And to do this, they have to tap into their growth potential. They have to grow at about 2% a year faster than they've been growing in the past. And that in turn requires improving their competitiveness, building links with trading partners that are themselves growing faster, and looking at inefficiencies and rigidities in their own labor markets. Countries of the Middle East and North Africa have traditionally traded with Europe, they've traded with North America. These parts of the world will still be important, but they're going to be growing much more slowly than they have been in the past. And that means that for the Middle East and North Africa, they have to find also new partners in faster growing parts of the world, particularly Asia. Some of this has already begun to happen, but so far that trade has been mostly raw materials from the Middle East in exchange for finished products from Asia. And now the key is going to be to see if the countries of the Middle East can tap into the global supply chain in a way that they can also be producing and exporting higher value-added products. To start off with, improving competitiveness in the Middle East and North Africa is to look at some of the very burdensome regulations for starting businesses, is to look at inefficiencies and rigidities in labor markets, and it's to look at the role of the public sector. The public sector attracts some of the best talent in these countries, but it also sets a minimum floor on wages, which sometimes makes it harder for the private sector to compete. And also, the educational and curriculum in these countries has traditionally produced graduates well suited for the public sector, now need to change in a way that they can also deliver on the jobs in the private sector in a different kind of skill set. In many of the oil exporting countries, particularly in the GCC, the banks entered this financial crisis with strong positions, and that helped them to deal with the impact of the global slowdown, particularly on real estate and asset prices in the GCC countries. Of course, this has meant that this has strained some of the balance sheets of some of the banks, but the governments took strong, decisive action. And as a result, while there is still a challenge to deepen the financial sector in these countries, in general, the banks remain solid and well-performing.